Welcome to the Abundant Accountant Podcast. This is where accountants come to learn all the ways you can grow your firm. When you are in doubt, we are here to help you out. If you're ready to learn, ready to grow your firm, then you are in the right place to sharpen those skills and increase your revenue. Welcome back to the Abundant Accountant Podcast. Today, we have a very special guest, Heath Walters, CPA, who is also the managing partner of Walters CPA Group. Heath is also certified as a North Carolina CPA since 2000, and he is really here to help all accountants, CPAs, EAs, really learn how to set boundaries with your clients. And he shares how setting boundaries has really escalated his business and firm to where he wants it to be, with not only the quality and abundance of clients that he loves to work with, and the revenue that's flowing into his business. Let's welcome Heath to the show.
Hi, Michelle. Great to be here.
Well, thank you so much for being here with us on the Abundant Accountant Podcast. And I'm very excited to talk to you today about a very important topic that, we hear this question probably almost every month about, setting boundaries when you have an accounting firm or, you're a CPA, enrolled agent or accountant, whatever you want to call yourself, and really understanding, knowing where to draw the line with clients. And we get it a lot. I know it's actually a really serious concern because today we are going to talk about the pros and cons of why should you have boundaries with your clients. And, I know you've tightened up your boundaries a lot in the last probably year. And I'd love to just have that kind of dialogue today and really help other accounting professionals understand, A, why it's important, and B, maybe why do you need to decide which boundaries are really good for you to set and which ones, which clients do you want to let in your doors. But before we get started, can you introduce yourself to everyone listening? Where you live, what kind of firm do you have, what it is that you specialize in, how long have you been around?
Awesome. Well, thanks, Michelle. I'm Heath Walters. I'm a CPA in Charlotte, North Carolina. And I, like most accountants, had a practice with 400 clients in it. And over the last 3 or 4 years, we have since sold or terminated about 90% of those clients. So we're down to about 40 now. And our practice now runs very holistic planning with clients in terms of doing strategic tax planning. We do books, we do tax returns, but everything we do with every client is consistent and it's really big. And in that time that we have transitioned from a whole lot of clients to not very many of them, we've basically quadrupled the size of our practice.
Well, I must say that's very impressive. And I'm sure every single person listening right now is like, Heath, how did you do that? That's really what I want to do. So today we're going to talk about that because I think for Heath, what I've seen you do a really great job at is really setting boundaries. So from your point of view, Heath, what does setting boundaries look like? What does that actually mean to you?
So first, before you set a boundary, you need to figure out who you are and who your clients are. And once you know who you want to serve and who you want to work with, then your boundaries are set to only work with those people. And for instance, we don't do just tax returns. So if somebody calls in and says, how much do you charge for tax returns? We say, you're going to need to find a different accountant because that's not what we do. We do tax planning and we will do a tax return, but that's a side business. And we are very, very, very strong and solid within those boundaries. Clients, I think we run about $500,000 for minimum income. And as clients.
So that's one of your boundaries, right? So not just doing tax returns is one boundary. Another one is that it has to be a business.
It does have to be a business.
Okay. 500,000 in revenue minimum and a business. Mm-hmm. Okay.
We do not specialize in terms of industry. I prefer, my specialty areas would be within construction and financial planning, the two areas that I like the most. But we don't limit to specific industries. I know a lot of accountants like to go after dentists and the medical professions, but we're not that focused on those areas. So that actually is not a boundary for us.
Why do you like the construction industry and financial planning? Like, what was the process on figuring out what you actually, or who you enjoyed working with? Did you work with 10 to 15 different industries to start and then narrowed it down? And then what did you pick, or how did you pick those two that you like the most?
Well, they happen to be the areas that I personally enjoy doing. I enjoy financial planning. I enjoy the whole financial picture. And I love construction. I worked in retail for a while, and I like building homes. I like all the construction methods of accounting and how those work because I understand them really well, and it just makes me comfortable. Mm-hmm. So when I'm working with the clients that I'm in an area that I enjoy the line of work, I can communicate with the client better. I understand their interworkings of the business. I understand how cash works in the business a lot better than I do in, say, a radiology practice. It's not my specialty. I don't work in it every day.
Yep. No. And I think that's important that you actually enjoy what you do every day, because this is the Abundant Accountant Podcast. So we want to live a life of abundance and have a firm and accounting practice of abundant clients we actually love to work with. So even if it's 40 people, at least they're awesome, right?
Oh, yeah. Yeah. That's one of the best parts about this. When I look back at where I was 3 or 4 years ago, and I talked to all these different people and they loved what we did, but they didn't really value our work, and they didn't value the effort we put in and what we were able to do for them because they didn't understand it. But once we started putting boundaries around the clients that we wanted to work with, and we could truly deliver the best service to those clients, it made it for the clients who loved working with us. They don't say, "Hey, I got to go see my accountant today. This is terrible." Like, they're really excited to come in and see. Like, whoever says, "Hey, I'm excited to go see my accountant," but
me,
yeah, you get to save a bunch of money too, right?
I'm just so glad I have all these friends that save me a lot of money. But and I think, like you say, you're truly able to deliver a better service once you set those boundaries. But can you share with us and take us back to the 3 or 4 years ago? What was life like for Heath and the firm? Can you explain what's shifted? Well, what was it like before? And then, what are the main 3 things that really shifted to today?
Well, life, I think, would be like most accountants experience. We've got the daily grind. We have people sending us emails. We've got deadlines that are really hard, and all of this workload is condensed into a short period of time, and we feel very stressed, and we don't know how we're going to get through the day, and we're working until midnight all the way through tax season. And that is life when you run a practice with 400 clients, and I don't even know how many returns. It was 700 or 800 tax returns. I mean, you see, it's so much stuff coming at you that you couldn't think, you couldn't focus, and you just felt beat down every day. Like, you're just going to work just to get work done, but you couldn't spend time with clients because you were stuck doing work. Mm-hmm. Fast forward a couple years later, now it's very different because, we only have 40 clients. Every client does have, 5 to 7 tax returns. So it's quite a few there, but we have enough time to spend with each family because we just don't have the volume. And tax time, when you only have 40 people, 40 families to do, it's a lot different than doing 400. So now we look at it and say, we have time to think, we have time to plan, we have time to reach out and call a client and find out how their birthday went, where we can do that kind of stuff today. Before, we were just in the daily grind.
So let's go through the process on how you did that. And I know part of it is by obviously setting the boundaries, but how did you even know, I couldn't deal with this anymore? I had to stop the grind. I couldn't work till midnight anymore. I had to stop the stress. I had to get, these deadlines were killing me. You couldn't really think or focus, and you felt beat down. And I think, like you said, a lot of your other counterparts are probably feeling a little bit the same way, but making that transition is scary, hard, and they're thinking, well, okay, how did you do that? So like, what's the first thing that you did to make this transition?
The first thing that we did was break out a group of about 100 clients, and we sold them to another CPA firm.
Okay.
And what we sold was basically a client list, and they were clients that it was just tax returns, clients that they were 1040 clients. They'll never own a business. So we don't do any investments. Like there was no other value we could bring to them other than doing a tax return. And we sold it off. We didn't make very much money on it. And the other accountant was happy because they got more volume. I don't understand why they thought I was crazy. And I thought they were crazy for taking it. But it solved a third of my revenue. So what that did in that first year was it freed up 25% of our workload. And we only took away 10% of our income. Now we could start to focus on the clients that ran a business and how do we deliver more value and charge more for that. Mm-hmm. So as we transitioned those clients out, freed up some time, we brought in higher paying clients to make up the difference in the price we lost. And we really, truly didn't even feel a revenue shift at all because we got a little bit of money for the sale. And then we just had more time. And we could focus on the better clients. Like it was great. So that was the first thing. And we did that. We sold the portion in the first year. And then the next 2 years, we we're terminating the relationship to a third each of the next 2 years. And that's how we managed the transition and the shift for our clients.
So it went kind of smoothly. It didn't all happen all at once. So for each person listening, it's not like you have to just cut and go.
No, my whole staff would have quit had I done that. That would have not been a great idea.
And you don't want to lose your whole team overnight. Otherwise, you don't have any support, even with your 40 clients.
Oh, yeah. Yeah, no, that doesn't work well either. So it does take some time. It takes the understanding of what we're going to do and where do we want to go? What are our boundaries and what do we want our firm to look like? And then we strategically plan that over a couple of years. I will say at the same time that we were letting those clients go, then I was spending a lot more time focusing on the clients we wanted to have. I was saying no to people that came in and, hey, I want to do a tax return. And it was, I'm sorry, but we just don't have the manpower to do that. Mm-hmm. And that was really hard because people came in that were friends of family. And it's like, oh my gosh, I'm getting ready to tell you no because I feel like I'm a helper. Right. But if I said yes, I'm going to put myself right back in the same boat and I can't move anywhere. So I started creating some relationships with other CPAs locally that wanted that type of work. And I had one of them in the north part of town and one in the south part of town. And I would just say, hey, clients, I'm sorry, this is not what I do, but I think that this person will be a whole lot cheaper for you than what we would end up charging. And I've seen their work. I've worked with them before, and I think you'll really like them. And just send them over, send an email to them and introduce them to that other CPA. And the CPAs were happy as could be. And I didn't feel like I was letting somebody down.
Right. So always having that referral source to let the clients that don't fit your boundaries have a happy place to go. And also letting those people know what you do so you can start receiving clients back to you who meet your boundaries and understanding, like also knowing where to draw the line. So Heath, I'd love to go back in time, right? Because now you're like this boundary superstar and you only take on clients that are a business with 500,000 or more in revenue, but it wasn't always this way. So can you share with us like a time where you had to turn away a client, right? Because of now you don't take on everybody, and share with the process and take us to that exact client and what happened and how did the meeting go? And really, how did you turn that person down? And maybe also how much revenue you didn't bring into the business to free up for other clients that do meet your standards. And understanding, like we were talking about earlier, like that's where we draw the line in the sand.
Got it. That's actually a very difficult thing, especially when you think someone is a good client or if there is a lot of revenue there to be done. And how do you turn someone down, not give them the help that they need, and not break your firm, but understanding where a client is good and not where they fit your ideal target. One of the boundaries I forgot to mention earlier is, having a business that has less than 4 partners in it. We found that once you have 4 partners, it's very, very, very difficult to get consensus amongst all 4 of them for implementing the strategies that we recommend. And it was just a couple of years ago, a great business came in that was making really good money. And they had, 3 or 4 partners inside of it, which was kind of on the borderline. But as we were going through, I knew how much money I could really save them. I mean, it was in the hundreds of thousands of dollars for doing tax planning. The problem was trying to work through the partners. They couldn't seem to connect well. They operated in a business more like an eat what you kill. And if one guy made a bunch of money, another guy didn't make any money, they didn't really care. And I could sense that as we were going through the conversations. And I knew if I made a recommendation for something, one guy was much older and retirement was important. One guy was much younger and he didn't care at all about retirement. He wanted his toys and, starting to save money for college. And just how we would try to implement a plan, I would have been so frustrated trying to get it done. So we walked away from a very, very, very significant tax planning fee and a really good monthly maintenance client because I was terrified the amount of effort we would have to put in trying to convince one person versus another to get synergy when that's not how they operated.
Mm-hmm. How much revenue did you probably turn away?
It would have been about a $1,500 a month client on your set maintenance, or your $18,000 a year, and about a $25,000, maybe between $25,000 and $40,000 tax planning fee.
Wow!
So it's a lot.
And did you turn away that person because that would have caused you stress? Not the time and allow you to focus on and get you a little beat down? Would that have driven you a little crazy?
Oh, it would have. And, I know that those are big numbers because, my firm did not do that when I started with this transition, but I knew that the amount of time I would spend for that, $25,000 would have been quadruple, if not more, if not 10 times what I would have spent on another client that I'm sure I was going to meet the next week of a very similar revenue stream. Mm-hmm. So it just made so much more sense to say, look, if I'm going to have to spend 30 or 40 or 50 hours trying to do this plan, and then long term, I'm going to have to do 4 different meetings with people because they can't get together. Right. I actually would lose money on that client. I wouldn't make money. Right. So it didn't make sense, even though the dollars looked awesome.
Right. So when the dollars are so awesome, right, and it's kind of hard because now you can see it, but sometimes when we're in it and you have payroll and you have your overhead expenses and you see an $18,000 a year revenue on the monthly and you see a $25,000 to $40,000 one-time annual fee, it's very difficult to turn away. So what are like the strict things that you talk to yourself and say to yourself, I cannot do this because, right? And keeping strict to your boundaries and not giving in on yourself. Because I think a lot of people listening, there's pros and cons to this, right? There's pros and cons to letting people go and then taking them in and then risking a domino effect of your time and stress and getting bogged down in the future. So I know we did talk about a few of the things that, you do today, but for someone listening, like what are those 3 things that no matter what he sticks to at all times?
I'm going to work with clients I like.
Okay.
If it's someone that I just feel like our personalities don't jive well, if they are an ideal client, I will send them to one of my peers that does tax planning, and I will make that referral for them. and just tell the client very nicely and politely. I don't tell them all the details about our business, but I just say that their business model doesn't fit with ours, but I think it'll fit better with this other person. And yes, I know that seems hard, but long-term relationships with the clients and happen to work with someone you really don't like, and you have to answer the phone because you know they're going to call you once a week, that just takes away my time from doing other items. And then I know I'm not productive.
Right.
So that's an absolute done. Just work with people that I like. We have minimums now for how much clients have to be able to afford to pay on the monthly maintenance. And I'm very clear and upfront with clients. If your business is too small to handle what we do, I give them about 5 or 6 tax planning strategies to lower their tax bill and say, hey, as your business grows, when you hit this $300,000 or $500,000 mark, why don't you call me at that point? Because these strategies I just gave you, you can execute those with your current accountant, and it'll work out really well. So it's creating a referral source for me, but also a future client if they were to fit into our model down the road. And the thing that is so neat about that response is it's about 1 out of every 2 or 3 clients that I say no to sends me a referral of someone that becomes a client because they now understand who we work with. And it happens so often. It's kind of crazy, but you turn one down and you all of a sudden have the next person coming back in.
Well, don't you think a lot of that is because you can actually have the time to let them in, right? That would be one of the pros to setting up your boundaries and sticking to them. But a lot of times people don't stick to them.
Yeah. So we allow with every new client that comes in between an hour and an hour and a half of get to know you time. So every single client has got that budgeted, and that's just the investment we put in every client to make sure that the fit is reciprocal on both sides. And I don't have anything else scheduled. I don't worry about anything else that I do other than that 1.5 hours of relationship building time. And yes, we definitely have the time to do that because once you block that time out to work with the people, the rest of the workload you're doing, you're able to delegate to the rest of your staff. Right. And you don't feel bogged down.
No, you don't. And you can provide this quality time with people that I would say I've been a client of a lot of CPAs in my past, right? And I feel like everyone doesn't have any time. And when you can provide a 180 difference and you're sitting and actually getting to know somebody and building that relationship and rapport with your clients, you're going to start attracting a different type of client. But in addition to that, you get to learn your first thing you shared, which is, do you like them or do you not like them?
Yes. Yeah. And honestly, that is such a freeing position to have, to walk into a meeting and say, I know that I'm only going to take on people that I want to work with. And when you fast forward your practice, even just a couple of months, and you think about all the times that people call you, and every time they call you, you actually like to talk to them, it's amazing how happy you are at work. And they are willing to pay you more money because they actually like you. So it's a really great business model. Once we can figure out how to get from out of the gate and how do we open up a little bit of time to provide a better service.
Right. What do you feel are the cons to keeping your boundaries or drawing a line in the sand? Because there's pros and cons to everything. I think we've talked a lot about the pros today, but what about the cons? Do you have any?
Yeah, absolutely. The cons are the money. And it's funny because it's a pro and a con. It's both.
It is both. I know.
Yeah, when we accept somebody that we don't want to work with, we bring in money, but we lose our time because it ends up costing us time down the road. And on the flip side of that con is the pro of you now have more time to work with the people you do better with and you're more efficient with, which makes you more productive per hour on the people that are coming in. But how do you not take a client on when you have payroll to meet? That is the most challenging piece to doing this. And that's why you have to be strategic about and proactive about how many people do you let go. Like, you don't want to let people go in the month of January, when is your lowest revenue time. Like, it would really hurt a CPA firm. But you can do that in April when your cash flow is the highest, because you just came out of tax season. Being smart about when you decline some of that revenue, and then refocus your efforts to bring in your ideal client in. That to me that's the worst one. The other one I mentioned earlier is feeling like you're letting somebody down.
Yeah.
And that's why you've got to have that referral source.
Yep. So they feel like they're in good hands.
Mm-hmm.
So can you share with us a specific example? This is on the con side. When you accepted somebody into the firm as a new client and it costs you more than the revenue you brought in. So everyone can learn from your experience and not have to make that mistake.
So I still do have some clients that are in my book of business that have been around for a long period of time that are not within those boundaries, because it's very difficult to shift that firm within a 3-year period. And today, when I look at the correlation of how we operate, we have a standard way of doing things. And if you pay us $100 a year, if you pay us $20,000, we're going to operate exactly the same. Well, if you look inside of the client base that we have, and I will have to do this transition again this year, but looking at the clients on an old revenue model where paying us a couple $100 a month is nowhere close to what we do today. But yet my entire team spends just as much time on those clients. So I truly lose money on maintaining clients at the level that we as a firm have. And that challenge I still see today. Every CPA is probably going to see that somewhat, because it's hard to get those boundaries completely tightened around existing clients and family and friends. And how do you do that? And that is really hard. And I am not there all the way on that one today. But the majority of our clients, I mean, it's probably less than 10% that we're not making money on for what we have today.
That's your pro bono work and your nonprofit work that you will soon to eliminate on this 4th year, correct?
Yeah, that is correct. Now, granted, those clients that are in that still send me great referrals. That's why I've left them on the books, but we are going to have to make transitions and move them to another person, and we will do that.
Right.
As hard as that is.
As hard as that is. Well, thank you so much, Heath, for being here with us today on the Abundant Accountant Podcast. Is there anything else that you'd love to share with the CPAs, EAs, accounting professionals listening today? Last words of wisdom as it relates to setting boundaries and really knowing where to draw the line in the sand with your clients.
As hard as it is to draw a line in the sand and to stick with that plan, it is a direct correlation that when you let go of a client and you don't take on a client that is not your ideal client, and you do it in the most respectful way and give them good value for the time you spent with them and send them off to someone else that they are a good fit for, it is almost direct correlation to your referrals that come in after that within a relatively short period of time, within a week, a month, of the ideal client you do want. But it takes the courage to say no to the wrong person that you don't want to work with. And the people that you want to work with just happen to show up. It's weird, but that is the reality. And I've trained quite a few about 7 or 10 other people to do this, and they have all experienced the exact same thing.
Awesome. So Heath, how can people find you, and can you share who you're looking for in case another CPA, EA, accounting professionals listening and they say, you know what, I want to send Heath some business?
Awesome. So we are rolling out Advanced Tax Partners, or ATP as we call that. And that organization is set up and designed to train and coach CPAs how to do this, how to make the transition of their practice, and how to start charging better rates and delivering better value to clients, and how to learn how to let go of people so that you can take on more productive clients, just to be coached through that process. And Advanced Tax Partners, that's our training company. And all of these years of experience and this torture that I went through to learn how to do this, we get to pass it over, and you get to be coached on how to do it from someone that's done this several times, not just me, but with other people inside of our organization.
Awesome. Well, we will put the link to the website to get in touch with Heath in the show notes below. But Heath, thank you so much for being here with us today. It was an honor to have you.
Thank you, Michelle. Talk to you soon.
Thank you all so much for joining Heath and I today on the Abundant Accountant podcast, and really talking about setting boundaries for your CPA firm and really understanding where to draw the line in the sand. And I'm sure a lot of you have hundreds of clients just like Heath had, and understanding, there is a way out of that and how you can really transform your practice. So today we talked a lot about the pros and the cons, and all I ask is that you put, one or two of those things into action today, because action is where, confidence is built. And that's really where you can make a really huge difference and dent in your practice. I would be grateful if you had a quick second to leave me a rating and a review on iTunes, and also subscribe to the show, because I always love hearing from you. And one last thing before I let you go. If you want to build an award-winning accounting practice with premium clients who pay you what you're worth while never having to negotiate or compromise on your fee, then I invite you to sign up for my free masterclass at theabundantaccountant.com. You will learn how to communicate your value, collect higher fees with confidence, and really get paid what you're worth so you can work less, make more money, and have that life of abundance. Once again, visit theabundantaccountant.com. I would love to see you there. Thanks again so much for listening, and have a great day.